Probably everybody in this room has heard the story about investing in fiber, right? So investors shy away from fiber. Investing in fiber has become a little more problematic. We're not talking about homes passed anymore. We're talking about homes activated. Banks would like to see cash flows. We're not doing greenfield financing anymore, and so on and so on. And we've not just talked only about the shortage that comes with respect to capital when we talk about refinancing. So yes, what's going on against this backdrop? Is fiber investing really in trouble? And if so, what can we do about it? Those are the questions that we want to talk about today, and I'm really, really honored to hopefully get some answers from this panel. And on this panel we have David Elfassi, and we have Jeroen Kleinjan, Johanna Reinkemeyer, Harald Gruber, and Christian Maher. And thank you very much for being here. It's an honor to have you. So I told you the questions that we would like to address, and because we also do a little bit of work at the FTTH Council. My name is Tom, and I'm the head of the Investor Council's, the FTTH Council Investors Committee. So what we do is we provide a little bit of research and background that may help to at least illustrate how answers to these questions could look like, right? And if I'm not mistaken, I can take this device and jump right into this research that I'm going to show you. So again, as an orientation, the question was, is financing really in trouble in fiber? And if so, what can we do about it? And this slide is pretty busy, but what you can see on there is, first of all, the latest figures with respect to fiber built out in key European countries. And what we can see there is that some of these countries, especially the UK, have caught up quite a bit. So last year, the slide has looked a little bit different, and what you can also see on the upper left quadrant of this page is we have this famous diversity within Europe, diversity not referring to gender, but of course to the build-out rates in Europe. And there are countries which lag behind, and there are countries who are up there, but what you could also take away from this slide is, wait a minute, there's still a long way to go. When we look at the upper left quadrant, we see, wow, there's still a lot of financing to do, a lot of investing to do, and of course a lot of building to do. Now, if we look a little bit to the right, to the upper right, we can see a sharp decline in investment volume from 2022 to 2023. This research has been brought to you also by Macquarie, who partnered up with the FTTH Council to bring you these figures, and is based on bank financings that they saw. Now, this decline is pretty staggering, from almost 30 billion to roughly 16 billion. Almost halved. What has happened there? Well, hopefully we will be able to answer that question to some extent today. Are we really in trouble? I mean, a decline of 50%, come on, what is that? That is really, really significant, right? How is the outlook for 2024 going to be? Now, we don't know, but of course at the FTTH Council we also try to answer that question. I'll come to that a little bit later. But first of all, let's look to the bottom of the slide. That is something on the left side which relates to interest rates, so we're still in a fairly high interest rate environment. It has come down a little bit from August last year, but still, if you look at the base rates, money is not cheap, and certainly not as cheap as it has been 2 years ago. Now, I already alluded to the fact that investors are getting a little more, let's say, sophisticated, let's also say demanding with respect to their investments. They want to see homes activated, they want to see cash. And that's one of the key points they look at when they do fiber financings. Let's move on and look at a couple of deals that we saw last year. For your benefit, I'm not going to go through all those deals, but if you look at that slide, you can see, wow, there has been a lot going on in this environment. Even if we have the overall investment, we have tons and tons of deals. And we also have like landmark transactions over, way over 1 billion euros to finance, or British pound in that case. So apparently, not everything seems to be lost. right? There's still financing going on, and this market is still rolling. The question is it declining? Is it increasing? What is happening here? So we tried to get a gauge, a measurement on that question by doing a survey at the FTTH Council. So we asked people, do you think that fiber investment is going to increase or decrease in the next 6 months or 3 years? Now, let's do a quick poll here in the room. Who thinks the next 6 months fiber investing is going to increase from today's levels? Raise your hand. Not very many, which strangely enough corresponds to what we also saw in the little survey that we did. Now, yeah, right, here we go. So for 6 months, people were, or the respondents to the survey told us, yeah, I'm not really optimistic, right? The mean score, which sort of roughly translates into average score, tells us, well, for the next 6 months, I see maybe no change or a slight decline. By the way, this was distributed to, or more than 100 people answered that, so there's some confidence that this mirrors actually the sentiment of investors out there. But for the next 3 years, people are more optimistic. So, well, opinion-wise, sentiment-wise, we're really facing a little trough here. And the optimism of people that things will get back to normal or even better than normal is certainly reflected in this survey. Now, okay, this is just an overview that we give to you, and it is a lot more interesting than this to really get down to the grassroots of things and to get the understanding and ask experts about their understanding of the situation. And with this, I would like to hand over to David to give us his perspective on fiber investing. Thank you.
Okay. Hello, everybody. My name is David Elfassi. I'm Vice President of Altitude Group, and I will try in 5 minutes to present 10 years of our history. Our group is leading by a woman, Dorothée Le Barbier, the daughter of the founder of our group, and we are the third infrastructure operator in France, and we work on the B2C part with a program of 5 million home passed, and to be connected as soon as possible, but 50% of penetration at time. And another brand, Covage, on the B2B market, to connect 100% of the French companies with optical fiber. The both company works with a pure wholesale model. We are almost 2,000 employees, a large growth since a couple of years. Our revenue are more than 7 million euros now. And we didn't see Altitude in your last slide, but we are open our capital last year and to raise money to invest on the B2B part in France because it's a really dynamic market. But you talk about refinancing in France due to our programs, because we work with local authorities through public tenders. We needed by the past to finance all the projects they won. So we don't need cash to finish our program now, but we have discussion about refinancing in the future of all those debts. And to explain our model, I explain to you quickly what is the French model, the best model with no problem, I hope. The case of the success of the French model, the first one is for me the best one, no overbuild nowhere in France. The French government decided, it was in 2010 I think, to launch a program. They said, okay, in very dense area you can do overbuilding like in Paris or whatever, because the concentration of population inside those towns. But for the rest of the France, no overbuild. So they decided to have a private initiative for I don't remember exactly, yes, it was around 16 million home passed. For that, it's private investment with no overbuild. And for the rest of the area, the rural area, they said we will do public tenders with local authorities for 18 million home passed. And in this model, we won 5 million home passed. And at time, it's almost finished because we will finish the construction at the end of 2025. The second K, after no overbuild, is a pure wholesale model. To finance our network, we work with the 4 major ISPs in France, Orange, Iliad, Altis, and Bouygues Telecom. And all those ISPs are on all our network, and they participate to the financing because they pay, I don't know if you know this model outside of France, they pay a upfront around 600 euros to have a right of use for each home passed for 20 years. And they pay day one. And after that, they pay around 5 euros per month for the maintenance. Okay? So that's the second point. And the third really important key of success in France is a good regulation. The price are fixed by the regulator. So when you are an ISP, you know that the price won't increase too much. But when you are infrastructure operator, you know that you will keep your price on a good level in comparison of your cost in the future. So it's why in France now we reach more than 85% of construction, and at the end of 2025 we will finish. And in comparison of other countries, and I finish like this, the French plan is to cover 100% of the population at the end of 2025. So it costs a lot of money, but due to no overbuild, pure wholesale model, and all ISPs on all the networks, we have a quite good success, and at time a penetration of more than 50%. So 50% of our home passed are definitely connected, and we connect 60,000 new customers each month on our networks. So a good success, I think, and a problem of refinancing in the future, but not problem of financing at time.
Thank you very much. Can you hear me? Okay. That is definitely an insight as to how actually state-driven initiatives can actually propel also investment and make business cases viable. Thank you very much, David. We'll discuss that later on.
Okay.
And we'll go on with Jérôme. I just have to pick up my notes. I forgot them. Yeah.
All right, hello everyone. So my name is Jeroen Klein. I'm with ING, globally responsible for the telecom business. And we do a lot of lending in telecom, and specifically in digital infrastructure. That is really our sweet spot. We're not just doing lending, but also debt advisory, and also very strong in M&A in digital infrastructure. And we're very active in Europe, increasingly also in the US, but Europe is our sweet spot. And what we see if we look at Europe, that there's still significant investment needed in Europe. There's different penetrations, there's different homes passed percentages in Europe, as everyone knows. There's the front runners that have more than 80% of homes already passed, like Portugal, Spain, and Sweden. Then you have a number of countries that are just behind, and France is a very good example. And I actually like very much what the French government has done in driving the homes passed in that country, in such a huge country. Because if you look at some of the other big countries in Europe, the UK is catching up now, but in Germany in particular, there's so much still to be done, I would say. Yeah, so there's still significant investment needed, and there's still a lot of money out there that's willing to finance that. But it is true that the environment has changed quite a lot. And there's various reasons for that. One is inflation, of course, increased cost. Labor cost has increased significantly to build out fiber. But the interest rate environment is also hampering some of the business plans that are largely funded by debt. And if a business plan is funded for more than 70% by debt and the interest rates triple or quadruple, then suddenly a lot of these business plans that were working before no longer work. So something needs to happen, and that is that especially penetration needs to increase, because ultimately subscribers are paying the interest cost also for the banks. Some other trends that we're seeing is that established players have more focused on the opportunity. The incumbents in the last 2-3 years have significantly stepped up. In France, Orange already did quite a lot. In Spain, Telefónica has done a lot. But in other countries, like in the Netherlands or Belgium in particular, or in Germany, the incumbents have stepped up. And that also has a pressure on the alternative operators that are rolling out fiber in their countries. So also the competitive environment is changing quite a bit. So the, let's call the new entrants, the alternative operators, in many countries are struggling a little bit. So what they need to do, in our view, is that the business plans need to be adapted. The business plans need to be adapted to moving away from building out fiber and homes passed, but really focusing on subscribers and making sure that the network is going to be used more and more. And we're currently going through that transition. We see that the business plans are changing. The debt is looking now much more at, okay, when are we actually going to be cash flow positive in this specific company? So the emphasis on homes connected is there. And still today, I've heard a lot about homes passed. I think we should talk more about subscriber numbers that we're seeing. All right, so, but overall, if I look at the next slide that I have, there's still a lot happening on homes passed. So we see a couple of countries here that we forecast the growth for in this particular year. In the UK, in France, in Germany, the number of homes passed are going to increase still this year. I'm fairly optimistic, I have to say. I do agree with the sentiment that was coming out of the survey, that probably in the next 6, maybe 12 months still, we're going through a little bit of a pause while everyone is refocusing their business plans and to see how they can drive the penetration. But the fundamentals of fiber are just so very strong that over the next 3 years, a lot more is happening. What I think is the best news here is that the usage of the networks also keeps on increasing. We see here the numbers that the usage of the networks is about 50%, and that is going to increase in the next couple of years. And that is ultimately what investors, banks or equity investors will need to see: subscriber numbers, penetration coming up, companies to become cash flow positive. So overall, let's focus on connecting subscribers. If that's happening, then I think the investments will come back in the next 2 or 3 years.
Right. Thank you, Jerome. Johanna, you're next.
Hello everyone, my name is Johanna Reinkemeyer and I'm an executive director in the infrastructure financing team at LBBW. A bit of background on LBBW. We are one of the largest banks in Germany with total assets of more than 300 billion euro and more than 10,000 employees across Germany. And in fiber financings, we've developed a strong footprint over the last years with a portfolio of more than 2 billion across the large countries, European fiber markets. As Jeroen just pointed out, I mean, different markets in Europe have different degrees of progress when it comes to fiber. with more mature markets like Portugal, Spain, France on the one side, and Germany and the UK on the other side. And the question now is, where does bank financing stand in the market with the highest rollout that still needs to be done, being Germany and the UK? Obviously, I mean, banks have become more cautious, as just mentioned by Jérôme, as a result of business cases looking different, as a result of higher cost, increasing interest rates. Some operators have lagged behind their business plans, and they are lagging behind in the actual performance when comparing that with the business plans. And also, there has been a lag in the take-up rate that has been lower than expected due to a bit lower than expected demand from the consumer side. So the question is, what are still sweet spots that banks like us like to finance in these days? First of all, of course, it's de-risked structures, like in the French market, as David just pointed out, and in other mature markets. I mean, the more brownfield it gets, the more visible are the cash flows. The second point is obviously operators that have off-take structures in place, for example, with large telcos in the respective market. But also, I mean, the most important point is the largest, most successful altnets that have a significant footprint of revenue-generating customers. I think these will always have a better access to capital, and we at LBBW are certainly very active in financing our clients. And this leads to the question where consolidation stands across Europe. I mean, we have markets like Spain with thousands of very small networks where consolidation has started a long time ago and is obviously still ongoing. And on the other side, we have a market like Germany or the UK, where the main question is, what adds value from an investor perspective? What would be an interesting acquisition target for a fiber co, for an operator? Some thoughts on that. I mean, first, it doesn't make sense to acquire an asset where the integration costs are higher than the acquisition cost. So either, I mean, in a consolidation scenario, in order to consolidate, such a company would need to come at a massive discount to the own build-out cost, which would then be an opportunistic decision, obviously, or it must be really complementary to the network of an operator. I think those can be the different parameters. And with regard to the German market, looking at consolidation, because that was like the question that was asked to me, is in many cases there has been and there still is a gap between the price that the seller of a network wants to achieve and the willingness to pay on the other side. I mean, we have seen the bid-ask spread to narrow down a bit, but still, I mean, especially for the German market, there have been some FTTC players coming around, but I think this year will also be very interesting with regard to some FTTH assets on the market. So those were my first thoughts on this, and I'm looking forward to the discussion.
Thank you very much. Harald, it's your turn.
Yeah. Thank you. I'm Harald Gruber. I'm from the European Investment Bank. The European Investment Bank, perhaps many of you have seen already the talk of Vice President Czerwinska, is the largest digital infrastructure financing institution in Europe. And we certainly follow very closely the market related to rollout of fiber infrastructure. I mean, we have seen several presentations today that currently the market is a little bit in a sort of a deceleration, so mainly due to the situation in the financial markets, which has led to a lot of reconsideration of business cases, or some may even say that there weren't even business cases, they were just money thrown out. Now, there is a huge process of consideration of redesigning of projects, of business plans. Probably it is helpful to the industry because simply it makes people think about how they invest in money for a long-term infrastructure, because this is an infrastructure, it's not like mobile infrastructure, which has a relatively short lifetime compared to fiber in the ground. Once it's buried in the ground, it's 20 years or more, 30 years or more. And so you have to be very careful of how you go about it. And therefore, long-term considerations have now got traction. And one of the parameters clearly, fiber infrastructure contributes to mitigating climate change. It's clearly, it has been one aspect that has been highlighted also in the session this morning by the Vice President. So basically, fiber infrastructure helps to fight climate change because it's a more energy efficient infrastructure. And clearly, one other aspect is related to, as it is a long-term infrastructure, what goes with it on security. Security is a fairly widespread domain. It is not always considered to the right proportion. Europe generally has been quite naive about it. they haven't really thought very carefully about who is supplying the infrastructure, what's in the infrastructure. It has been some sort of wake-up calls have then come along once people have realized that this is an infrastructure where basically the economy depends upon, and it is very important that this is safe, so that basically there is no much scope for intrusion of third parties who are not supposed to have access to data that's flowing over this infrastructure. Now, we as a bank have been now engaged in quite a discussion internally also of how we can make sure that infrastructure is safe. Clearly, this is an additional challenge for investment because it doesn't make it cheaper if you make sure that your infrastructure is safe. So you're not going just for the cheapest supplier which is on the market. You want also to have additional features that are incorporated. So it considerably interferes with the sort of free market design of the infrastructure because you have to take into account additional features. You have additional parties involved, cybersecurity parties or government. Ultimately, it also sometimes boils down to trade issues because buzzword strategic independence. We know that in certain sectors, it has been clearly sort of energy sectors, where you are excessively dependent upon a third country or third countries, where you're not sure whether they are reliable for you in making a stable supply or ensuring the supply, and you're dependent on that. We have seen that what economic damage can arise from that. We have seen it with energy. We can see it also, one of the things is chips now. Now people is getting quite concerned about the dependency on chips, where we rely to a large extent from regions which politically are not necessarily stable. So what do you do if from one day to the next you will have a cut in the supply of certain key components that you need for your production? In the same way, you have the infrastructure you install, you have to make sure that the infrastructure has a reliable supply of components, that the supply itself is reliable, and also the content, what's in the component, is also reliable in terms of safety. So these are concerns that have not been taken into account to the appropriate structure. In some countries now they have decided to swap out infrastructure, relatively recent infrastructure. They have decided because they believe this infrastructure is not up to the levels of safety they would have thought so. So additional costs that ultimately, one way or the other, the companies have to carry. Some of it may be translated to the final customer, but not everything necessarily can be. So, I mean, what I want to say is that basically the environment for digital infrastructure has not become easier. So, apart from the fact that the financial markets have not turned to the advantage of the sector, there are some additional challenges that the sector needs to shoulder. And it's good that in this context, it is, since there's anyway a general revision of the business plans, that this is adequately taken into account. And so that is a sort of, how shall I say, a reminder that we need to invest in this infrastructure because this is key. But we have to be very, very careful and take all the concerns into account, even if that may lead also to higher costs. That's what is from the perspective of a European policy bank, that's what I can convey as a sort of message at this stage.
Thank you, Harold. And Christian, your turn.
There we go. Hi, everyone. My name's Christian Ma. I'm an MD in the tech team at Houlihan Lokey, and I'm jointly responsible for European digital infrastructure. And most of what I do is try to raise capital for digital infrastructure businesses, not just fiber, but including fiber, or M&A, where we're obviously selling those businesses or merging them with other people. I've got 3 slides on Houlihan Lokey, and I'll be honest, they're rather dull, so I'm going to go through them very quickly. They all say how wonderful it is as a bank, and it is fair to say that in the mid-market, we're the #1 global M&A firm. We're the #1 in financial restructuring and in valuation work as well. And you know, restructuring where the debt becomes too much for some of these companies clearly is something that companies within the fiber space are having to consider. We ourselves, Houlihan Lokey, have been active recently in the German market on one such example. Most of what I do is M&A, as I said, and we have a team of 45 professionals solely focused on digital infrastructure in the US and in Europe. We think that makes us the largest investment banking team around. And in Europe alone, we've been active even in the last couple of weeks. So we sold a small alternative fiber operator in the UK called Lit Fiber to City Fiber last week. And City Fiber, as most of you will know, is the big rival wholesale platform in the UK, which has passed about 3.5 million homes. And I think we're the leading sector team, and that's really what that slide is saying. I think we're obviously going to have a discussion around it, but I think to try and answer some of these questions, and I'll make a few predictions if I may. I think in terms of the financing environment overall, I forget exactly what the slide said, but maybe it said it will be moderately down. Personally, I think it will almost certainly be down over the next 6 to 12 months. I think the interest rate cycle is still primarily the main driver of that. So one needs to be more confident around where interest rates are going before I think the financing environment really comes back. So I think you're looking until 2025, maybe even 26, before we get a real resurgence in financing generally. That's a personal view. That being said, I'd say versus 12 months ago, i.e. now versus 12 months ago, I would say the debt market is moderately better. I would say the market for getting new equity into some fiber businesses is not any better. It's still challenging in a number of geographies. And I think, you know, without being overly cautious, the reality is a lot of the modeling that was done by people like me, I suspect, has proven to be incorrect in certain geographies especially, both in terms of penetration rates, ARPUs, and the like. You know, we got it wrong. But I think it is important to obviously make the comment that people said earlier, which is that not all geographies are equal. And I think sometimes even someone like myself who lives and works in the UK, you look at all the news in the UK and you do get a bit depressed around fiber, probably justifiably so in many respects. Even in Germany, clearly there are lots and lots of challenges. But other geographies, as we've discussed, France and Spain, for different reasons, Portugal as well, have very successful companies doing great things on fiber. And not every company, even within the more distressed geographies, is struggling. It's just there's a lot of questions, I think, to answer. So personally, I think to the question that's posed by the panel, I think there's a couple of things to think about. One is I think a lot of investors have to accept that the returns will be lower than when they first put their money in. That's the first thing I would say. I think the second thing is that the payback will be longer. You know, it's mainly driven by a higher interest rate cycle versus when they put investment in. It's going to take longer to get the money back and make a return. And I think the other theme that will happen more aggressively than people predict is I think consolidation amongst fiber businesses, amongst the alternative operators, will happen faster than people predict. So for those of us that have been in the telecom sector a long time, consolidation cycles in telecoms have often taken a very long time, 10 years, maybe even 15 years, depending on how you look at it. I think the consolidation that needs to happen in fiber, because it does need to happen, not everyone, but it does need to happen, is going to take a shorter period of time. And not everyone will make a decent return, but it's the right thing to do, and I think we're starting to see the early signs of consolidation happening in this market. And fundamentally, that's a positive thing, and I think it'll be rapid in several geographies. And I suspect that until the UK and Germany start to consolidate more frequently, the perception of fiber overall, even though some geographies are doing really, really well, the perception of some fiber overall will remain cautious. So I think the consolidation is the answer. It needs to speed up, and my prediction is that it will.
Thank you very much. Great comments, great opening statements. What's going to happen now is that we're going to discuss a little bit here on stage, which may be interesting to you, but we'll also offer you, the audience, of course, the opportunity to ask questions. Usually we do this in the end, but if you have anything that burns on your mind and you want to get rid of a question right away, you can just raise your hands, and we have colleagues here who will come around with a microphone, right? But in the end, I will ask you in roughly like 30 minutes to ask questions, and you get the opportunity. I mean, what kind of opportunity is this, right? So many experts on stage, and you can ask questions. That's awesome. So I really invite you to do this and to even foster the interactiveness of this session with your own comments and questions. But before we do that, let me try and summarize what I've just heard, which is quite a challenge because the topics that we heard were manifold. Going back to the initial question that we asked, now, are we in trouble investment-wise, or are we also facing potential for solutions? We heard, let me say, two basic areas, right? One is more the internal perspective of the firm, and the other one is the more external perspective of the market. If we look at the firm, we heard about risks. We heard about eliminating the risk of overbuild. We heard about the cybersecurity protection risk and other protection risks of these networks to make them really long-term. We heard about business cases, which is like the revenue side of things. We haven't really talked about ARPU, but we talked a little bit about increasing the subscribers, and we talked a little bit about take-up rates and making business cases more viable, more cash generating, right? And there were also these perspectives of the market, like is the current dip, the current trough in investment actually driven by the high interest rates? And what about consolidation? Is this really a market pressure out there that is real and becomes even more imminent, as Christian has just laid out? So the question is, where do we start? And let me ask the panel an open question, not to any specific person, but from your perspective, as an investor or from your relationship with investors, what do you see really being the key driver here? Is it more these external factors from the market that currently have an essential impact on your investment decisions? Or is it more the internal business case and the risk management and the revenue generation? What really is it? Who wants to take a first stab at this?
No, I can.
Nothing?
No, I can go ahead.
Yeah, please.
We don't have any problem about revenues on the long term. So I continue to talk about technique to have a risk out. In France, we have a whole copper network with really long line in comparison of Germany or UK with short line.
Yep.
So we decide to do the decommissioning of copper maximum at the end of 2030. Yeah. So for our model, okay, it depends on RPU, it depends on construction, but we know that at the end of the day, or the end of 2030, we won't have another competitive infrastructure in France, optical fiber. So I think for every country, we have to do a choice. Which media we want to use for fixed access in the future. I think we all think it's optical fiber. So the incumbent with the government have to do this choice to fix a date to have only one media, in addition with 5G, 6G, etc. So with our investors, we try to finish our rolling out, but like I said, it will be finished in a year. We try to have the best RPU in comparison of our cost, but when you are in a very strong regulate program, you cannot increase RPU when you want. That's you have to pay that for your monopoly. But now I think the best way for me to be sure that you have return on invest on the deployment of optical fiber is to say, I've got only one infrastructure and one single media in my country with no competitive infrastructure in front of it. It's why we like the French model.
I can imagine. Let me ask the others. Is that something, Harald, which you say is a definitive measure to decrease risk, to increase revenues?
I mean, definitive measure. I mean, clearly, the French option is clearly one of the things. It's a little bit like the incandescent light bulb. Okay, you forbid it, and I mean, everybody agrees that the other LED lamps are more energy efficient. That's it. And so you get rid of the old stock of incandescent light of people who believe that they are the best solution. So that's one thing. Yes, it's one way to go about it. But I think. And this is also what the prize winner, the Open Fiber, they said they have a huge problem of take-up. So I think one is, okay, you go there with administrative measures, you forbid alternatives. That's one thing. Or the other one is you have to go to persuade customers about the usefulness of fiber compared to other alternatives, fixed alternatives. So, I think not in all countries simply a shut-off is accepted or it's legally enforceable. You can have these kind of problems. But I think they can learn from the mobile sector. You have to persuade customers that having fiber is better. It may even cost you more, but you get more out of it. And there's still little imagination what you can do with a fiber in the home. It's not just about streaming TVs and things like that. It's much, much more. And I think what the sector has to do is to develop all the services that go with this fast connection. And at the end, this is also business. So I think, if I can say it, it's not. I would say it's lazy, but it's still a little bit inert in basically promoting this sort of business opportunities that we can see that are out there. And I think also the government can contribute very much more about this, basically trying to digitalize the services in a way that you can provide better services to citizens in faster times, and you could also, as a result of that, justify universal access propositions, because every citizen should have right to those kind of services. And as a result of that, the government has to provide, with opportune measures, access to all of fiber. So I think it requires more imagination. That's I would say.
So revenue increases through either clever ways to manage ARPU, if I may summarize it like this, or state influence, right? David, would you agree to what Harald has just said? Is that, you know, we're sort of between two poles here, and we can also strike a balance between these two. But would you really think this is effective?
I don't really agree on one point. It's evident that we have to find new services to use optical fiber, but we all already do it. The gigaoctet consummation grows day by day. It's the evidence that we do that for the moment. But I come back on France. On France now, if you are a customer of Orange, if you want to order a DSL access where optical fiber is available, it's impossible. So if you want to not have a problem of take-up, when you are an ISP, you have to choose if you want to do optical fiber or only protect your business on DSL access, but you have to choose, and that's the best way to have a good take-up. And like I said, probably the wholesale model is a good option because you sell the same price to all the ISPs, and where you are not like us, an ISPs, it's a good point, you know? So I agree with you, but only on one point. I think, like I said, you have to choose the good media in the future.
Yeah, if I can respond to that, I think the wholesale model that works very well in France, where you have all the 4 operators on your network and driving penetration. That's not the case in every country, right? In some countries, it's actually better to have your own ISP, to certainly in the initial phase, to drive up the penetration on the networks. Especially if you're not linked to the incumbent. If you don't have the incumbent on your own network as a wholesaler, then it's a tough game to really get there. So then you really need your own ISP to drive that up. And I don't think that ARPU is necessarily the issue. It's the subscribers and getting them on the network. And what we've seen is in the different countries in Europe that initially it goes slow as fiber is not widely spread in the countries. At a certain point, you get to a sort of maturity of the market where everyone starts to expect to having fiber-like speeds in the networks, and then the demand will follow. So first it goes very slow that people actually want fiber, but at a certain point you reach this breaking point and then suddenly it goes very quick. And some countries have reached that, but other countries clearly haven't.
So it's like this tipping point, which is not really driven by ARPUs or cost or consumer. It's more like a natural curve that happens in each country, even those which are lagging behind, depending on external factors. Johanna, would you agree with that? Are you looking at business cases the same way?
Yeah, I'm thinking about, like, in Germany we have a different situation with regard to the cable penetration. So I'm not sure. I mean, we have seen obviously delays in the take-up rates in the German many of the German transactions, and I think one reason for that is the cable penetration across Germany, which is substantially higher than in other European countries. And also maybe one part of the difficulty in Germany is we have a bit of a background noise and a bit of an unclear stance from the regulator, being Bundesnetzagentur, and we also have the behavior of Deutsche Telekom. We have overbuilt concerns by the operators. So I think that creates uncertainty, which is never a good thing to have.
Now, let's get a little bit creative with respect to what we've just discussed, right? So apparently there are countries and there are operators and network owners who are doing things a little bit better than others. So apparently there are pockets within this market with a development that is a little more favorable than in other pockets. So Christian, I don't know, it's a little bit of a mean question to you, but you talked about consolidation, you talked about an even more accelerated consolidation than what many people here in this room would expect. So this has to be driven. This has to be driven by companies. It's probably not being driven so much by external factors. So if we think about consolidation scenarios, who will be the nucleus really driving this? What does an ideal company look like to kick this off, to really, do the first step? Sorry for that. That's a difficult question.
It is. Thank you. Yeah, no, it's a difficult question. I don't have a perfect answer to that. I guess one thing I would say that's obviously different geographies are very different. I mean, that's the first thing. So, and regulation, whether it's been done well historically or not, has a lot to answer for in terms of what we see across Europe, I think. And we were discussing earlier about France and how that was perhaps done in a better way than we've seen in other geographies. So I think some geographies just don't really need consolidation, but there's plenty of geographies which I think do. In terms of what's driving it, I think it is actually external factors a lot of the time, to be honest. I think there's a number of businesses which got business plans somewhat wrong, and it's taken longer to roll out networks, and they've had to borrow money at a higher interest rate than they expected. And that means that some of these businesses, if they're not distressed, they are stressed, shall we say. And I think there's a number of equity investors alongside them, even if they don't have debt in these businesses, who are going to decide that when the market turns for financing, it's better to be part of something bigger than to be a relatively small operator. Because when financing comes back, it's almost certainly going to go back to some of the bigger players first, whether we like to think that or not. And this is not a great answer to your question, but I think it's interesting to see, and I think, like I said earlier, we can talk about the UK and maybe Germany and all get a bit depressed. So I think we don't want to just talk about that, but I think in the UK we're going to see a lot of mergers. A lot of them are going to be equity only, where people have to accept shares in a larger business. And we're starting to see some of that in the UK with the likes of CityFibre, who themselves have a lot of leverage. But I think they, as an example, will consolidate a reasonable amount of the UK market. And I think for some of the smaller operators, even though they still have on paper equity backing and a bit of a runway on debt, I think that they will be under pressure to become part of something bigger sooner than we think.
So is consolidation, to really pinpoint it, is consolidation really one of the solutions that we asked for?
Well, I think that if we don't have it, we're going to find some fiber businesses have really severe problems. Because, as I say, I don't think the financing, certainly from debt and probably from equity as well, is really there for some of the smaller operators on a 2-year view. And so they have, not a limited shelf life, but I think they have decisions to make. And if I was sat on that board as an investor, I would be thinking, if I don't think the debt market's going to be much better for the next 12 months, and I'm not prepared to put in loads more equity myself for a business plan that's done okay but not brilliant, then be part of something bigger, and let's hope that it does improve. And I think with bigger companies or smaller companies getting together with bigger companies, fundamentally, I think they will end up generally attracting more financing and having a better chance of fulfilling their potential.
Allow me to bring in the others on this discussion because it's quite interesting, not only from an overall perspective, but also if you look at different network layers. So if you look at layer 1, layer 2, layer 3, what is really the layer where the first consolidation impetus is going to happen? And are there really economies of scale on layer 1, on the infrastructure layer? Those are all interesting questions. So does anyone want to try and have a go on this?
Yeah, I can try. I mean, what you just mentioned especially on the smaller regional players, I think this is a really relevant question because what we've also seen in the last year is obviously that it gets increasingly difficult for these smaller regional players, for example, in the German market, to get financing in place. And the right question is what will happen now and now in 2024. And I think there is a difference. I mean, there might also be some FTTC networks, like legacy ones, that are even cash flow positive. So these might be able, to overcome that time without an additional debt financing. Yeah. They won't be able to incur any substantial capex for further rollout, but they will be able to continue to exist, right? But if you have a really small player that needs the capex in order to have a sustainable network, then I fully agree it gets very difficult.
Right, would the others agree?
Yeah, I sort of half agree, mostly agree. Ultimately, telecom is a scale business, right? So you would expect a lot of M&A activity, and over time, in all the countries, that there's only going to be 2, maybe 3 platforms in that country. That's sort of the longer term where it's going to end up. And indeed, the financing is going to be available to these larger platforms. In the medium term, I think just to throw in some thinking here on the size of the companies, currently a lot of the banks that maybe have been riding the wave on fiber and have been investing that, but don't really understand the business necessarily, they look at fiber as one big common universe, and they don't differentiate really between France or the UK or Germany or any other country. So they've stepped out of the market and basically said, we're not doing any fiber, we're full on fiber. So you need that type of participants to really drive these larger transactions. So if you're going to underwrite a larger transaction, you need participants that don't necessarily have that knowledge to differentiate. And those have gone. So for the time being, it's very difficult to do big deals because the small participants are not there. So what we're seeing actually now is that, okay, forget about the really small operators, but it's sort of the medium-sized operators that are still having access to liquidity and to financing, because the banks that do understand really the business and differentiate come together in club deals and provide those facilities. So that is happening currently. Over time, yes, the bigger ones are going to be the ones that get most liquidity. But for now, that's just very tough.
To expand the circle here just a little bit, one other thing that could drive consolidation is refinancing, which is due now for many fiber companies out there who had taken initial financing when the interest rates were still low, and now have to refinance at significantly higher interest rates, and that poses a challenge to some of these actors out there. So this could also lead into a more forceful consolidation phase. And Harald, I'm not even talking about reinvesting for cybersecurity, which maybe is something which looms on the horizon for many a company out there who may not be able to afford it. So this refinancing wall, as it creeps closer, do you see this also as a potential driver for mergers and acquisitions, consolidation?
Yeah, absolutely. I mean, clearly, I see it that fiber market is a sort of a new market, so there's learning involved. So everybody wants to have a go. It was eased by the financial markets, so there was quite a flurry. You had that years ago also in the mobile sector, where there were imagination that could be 5, 6, or even 7 operators in the country, that the market could carry those. And so there was also a dripping out, and you consolidated to typically to a 3-operator market or something of that kind. I think that with these refinancing rounds and basically whittling out of operators, you can have a similar consolidation trend, which I think ultimately it is healthy, because I mean, hopefully it assures the survival of the fittest, in a sort of the best business concept, and because financial markets have become definitely much more selective, in the sense that they're looking now what does the investment yield in terms of, in the medium term at least, in terms of financing. So I see it in one way as a positive signal. There is a consolidation moment, which I think was necessary because simply operators have tried different ways of going about the business. Some got a bloody nose, some learned, and some got it right from the start. So I mean, it's typical because it is. I see it as a very innovative market, and in my view, they're quite. I mean, I mentioned a few before. There's still quite some upsides in the market that could be reaped, and I'm looking forward also with a certain degree of optimism that there are opportunities out there for the markets to grow, and consolidation would certainly help to basically somehow to consolidate also the financial mass to channel it towards things that are in the long term promising at least.
Right. David, I know you're not really afraid of refinancing, and you don't have to be, but how does that look for you? Would you approach different investors now as you enter into the next stage of financing, as we could call it?
We don't have the problem of a wall of refinancing because we respect almost our business plan, how we're rolling out, our penetration. So we just want to do refinancing to have better condition because during the construction phase, you don't have the best condition. So at the end of the construction, we try to have better condition to do a better yield for the shareholders and to continue to invest it what we call the life of the network in the future, to have a network more resilient, like you said, bury the network, because in France we have a lot of infrastructure on poles, and it's problem for us in the future due to the climate change. But clearly, refinancing for us is just an opportunity, but not a wall.
Awesome.
Yeah, I think you're in a luxury position. There's not many like you that that are in that position, but you're a relatively mature company, and I think the ability to attract money for someone like you with your platform and significant EBITDA margins, etc., then it's relatively easy. And actually, I think also then. If you move towards more investment grade type of financing platforms,
yes, exactly.
then you're going to attract a whole different bunch of financing opportunities with USPPs available, etc., etc. There's not many fiber operators in Europe that are fitting that profile. There's maybe two or three.
Yes, I see.
And that's it.
I see.
Right.
Yes, I see. It's quite different when you respect your first business plan, etc. It should be difficult, but like I tried to explain, I understand what it happens out of France, but when you deploy optical fiber, you have to choose to stop because you don't respect exactly your business plan, or probably to accelerate, to finish the deployment of a whole town and try to do more wholesale, plus your own business with your own ISP, etc. The different way to try to have a better results in the future. But I realize that we are quite lucky in France, and it's a little bit difficult outside.
Yeah, but nevertheless, I think that's really an important point, right? Because Jeroen, you just mentioned that some banks would say they're full of fiber and don't differentiate between the different markets. However, we have the French market, and there are really large players out there that have like billions of euros of financing volume, and they can tap the institutional debt market, and these projects start to get external ratings and so on. So that really attracts a totally different kind of investors. So that again leaves room for the banks, to also, to look at different projects now that this kind of asset class is being attracted by institutes as well.
Yeah. Then you don't depend on bank liquidity any longer, and then you're talking about a whole different ballgame.
And I want to add a last thing. In comparison, 10 years ago, I was not so cool. because we deployed a lot of capital. Incumbents say to us, we will never on your network. The other ISPs, we will never be on your network. So we had to create our own ISPs to begin the first percentage of penetration alone.
Yep.
And after, I remember 60,000 customers, okay, the incumbent, Orange said, okay, stop.
Exactly.
I buy your little ISPs and I come on your networks. But it was not a win at the beginning. Okay,
Yep.
so I understand. 10 years ago, it was more difficult for us.
Yeah, but some of these operators in Europe, in other countries, are still in that position, right?
Yeah, absolutely.
Yeah. However, with higher capex, higher interest rate, and higher, and more difficult conditions to deploy a network.
Yeah.
All right, we have a little bit more than 10 minutes to go. Sorry to make you aware of the time because the conversation is really flowing now, which is a good sign. But we do not want to lose track of the audience. So if there is anything that we can answer for you, yes. And I see a raised hand there. And if you would wait for, just keep your hand up so the microphone can find its way to you.
I have two questions for David. Is it too late for countries like Germany or the UK to apply the French model, which we all can recognize by now that it appears to be the best? So then the conference perhaps will not take place over 3 days, but over 1 day because everybody's happy with the outcome. And the second question, what happens after you finish the deployment of fiber in France?
Thank you. I begin with the second question, which is easier to think to the first one. No, at the end of the deployment in France, we have two new challenges. First, we want to work outside of France, but not like an investors, just like an industrial, because we have a team of 400 employees in France for the construction. So at the end of 2025, we need activities for those people. So it's why we are talking with German operator, Italian operator, England operator, etc. And we also try to develop more revenues through smart services with local authorities, because if we want to have more intelligent territories in France, we have to use IoT everywhere for energy, for transport, etc. So we try to develop a lot of services through smart services. And on the first question, for sure, for me, it's too late for UK or for Germany to try to do the same things that in France. But I think you can continue to brain about the fact of, for example, I visit some operators and they say to me, okay, my penetration is 25% or 30%, so I decide to build only my 25%, my 30% in different towns. But probably you could develop less town, but more coverage because I think definitely a key of the French model that you can do the same in Germany or UK. For sure, in the future, if you build the first all the territory, it could be a global area but a simple town. Mm-hmm. And if you keep a good wholesale open model for the other ISPs, for sure you will win in the future. Mm-hmm. Yeah. It could be hard for the first years, but in the future you will win. So if you can catch something from France, it's to be sure you build the first, a good wholesale model with a good price.
Yep. That's the statement. We had another question, I guess, in this area. Is that true?
Is anyone yet paying any attention in consolidation to the quality of network, or making any distinction between what's a good network and what's a bad network when it comes to consolidation and M&A, and what are the either metrics or qualitative indicators for one versus the other?
Yeah.
Good question.
I can try to take that one. Although, I mean, obviously I'm a bank, so we're talking to our investors and they have a strong opinion about that one. I think this is something that is always very important to them, the quality of the network, but also the documentation of the quality of the network in order to assess, if it has been built in a proper way. And one of the things that are also very important in assessing that you need customers on the network in order to understand if it works properly. So when I'm thinking about a scenario, a really worst case scenario in which there is a network that has no customers, that is not active anymore, I think that wouldn't be an attractive target for an investor.
2 years ago, with a large problem of quality. Really,
So yeah, why don't you share this with the overall audience?
2 years ago, we bought another operator, a consolidation in France, and this operator has already constructed 500,000 home passed with really bad quality. And immediately you realize that you don't have the take-up in comparison of our other networks. So we decided to stop the commercialization, to do again the job, to have a good quality on the network, and just after that, the take-up is coming back.
Yeah, so this really struck
no quality,
a note
no
here.
customer.
Yeah.
So Christian, you also had something to contribute here.
Yeah, I mean, I think the easy answer is to say the quality of the network is very, very important, and it's got to be amazing, and if it's not amazing, I think the reality is that in terms of how consolidation will play out, if you can buy a home ready for service cheaper than you can, through consolidation, cheaper than you can build it, you're immediately in an interesting conversation. And there are a lot of engineers or former engineers running fiber businesses, so there's a lot of DD that does happen around the quality of the networks, and obviously we understand it generically. But I think in terms of how consolidation will play out, it may end up being less important than people think. And this is a really interesting question, because if you've spent, I don't know, 5,000 euros a home passed, and that's how much it would cost for you in the future. But you can buy a business that's maybe spent only 1,000 euros per home passed, and you may not even have to part with any cash to do that. You can just merge. I think those kind of combinations, even if the build quality is, I don't know, average or not even average, I think that becomes a very interesting conversation, because there may not be, only in the near term, I totally agree with what other people have said, the firepower to carry on building. And so people are going to have to potentially accept a lower quality build to get to scale.
And there is the quality, but also the specificity. And when you deploy an optical fiber network, you must ask the other operator, the other ISPs, to be sure to have the good specificity for everyone for a future wholesale model.
So let me ask a stupid question here, because I'm not a technician, but if I acquire a network which has a poor quality, can it happen that I have to write off the whole network because it just doesn't work, or is there still a part of the network that I could use? So what do you say? So from your experience in acquiring a network which had a low quality?
No, the only way you have is to keep your actual customers, to try, because on optical fiber, with specificity or not, if you don't touch the network day by day, you won't have problem with your actual customers. So best way is to stop to sell new customers, because with the bad quality, each day you are in a street cabinet. When you move a cable, you touch another cable, and when you want to repair someone, you cut another person. So the important things is to say, okay, stop. I have to build the network again, not for the full price, huh? Don't worry. But for example, we had to invest almost 25 million euros to do again the engineering of 400 to 500,000 home passed. But you have to do that because it's clear. If you have a problem of quality, the first customers come, he said to his neighbor, oh, no, don't come, it doesn't work. So you need a good quality on optical fiber. And in France specifically, we watch TV across optical fiber. If you don't have the quality, it's impossible.
Thanks. We have time for one more question, I guess. Yves, you had a question?
Thank you. Yes, I'm Yves Blondel. I work on telecom regulation. I have a question to the bankers, financial community about your confidence in an announcement by the European Commission in the white paper that everybody is debating that there will be a cutoff date for the copper networks, which is obviously a major trigger for take-up of fiber, as everybody on this conference is saying. So do you believe the promise that is made that there will be a date written in some kind of EU legislation that will shut down the copper networks everywhere? Do you believe it's realistic? Do you believe that the promise is realistic? Do you believe it will be achieved? I think there's like gradations in there. So I'm interested in your confidence in that announcement, promise, proposal, whatever you might name it. It's of course only a proposal for consultation.
Okay, thanks.
But I'm skeptical about finding a date because, I mean, this discussion goes on already since 10 years. I suppose it will be another 10 years of discussion.
Okay, any other opinions?
Yeah, confidence, I don't know, but the question that we should ask ourselves as financial, how important is it going to be that it's going to be switched off? Or are there other factors that are more important to looking at a business plan and knowing that it's going to be achievable or not? And I think 2030 is long out. So if I look at the business plan and they can deliver the next 2-3 years, the penetration that they're promising, that is already very helpful. What happens in 6 or 7 years, the switch off might help penetration a little bit in the longer end, but that is not where the difference is being made on whether or not a business is financeable or not.
But wouldn't you, I mean, wouldn't it nevertheless be a really important signal, especially when it comes to the market where the incumbent still relies very much on the copper network?
Yeah,
I think it would make in the heads of in the minds of the people, it would make a large difference, even if in the end date is not 2030 or it delays to whatever 2031. I think that's that's not the point. The point is rather than finding the date and writing it down.
So it's helpful, but therefore I see it as an upside. If this is happening, great. But I'm not banking on it.
No, we're not.
And don't forget that view from an ISP. In the future, after the extension of copper, you will have a better EBITDA. Because today, for a unique customer, if you have DSL equipment, optical equipment, cable equipment, in the same time, you maintain all the infrastructure for only one customer. So after the extension in copper, the EBITDA, everybody will better. But I'm for sure it's a question not for the regulator, but for the incumbent of each country.
Yeah, I mean, sadly, we're in the UK, we're not in the EU anymore, which I've always promised myself I won't mention, but I feel like I have to. But I would. What is interesting, it's a very good question, and who knows in a sense, but some island telcos that are not necessarily in the EU but around the world have rolled out fiber and have just said we're stopping copper. And it's been amazingly positive in terms of really accelerating take-up and concentrating people's minds. So I would imagine that if it does come in, whatever the date needs to be, that would be a positive, I would have thought, and probably a real catalyst again.
Ladies and gentlemen, that's a very, very nice and positive outlook. We have to take this as the concluding remark here because we're getting signals that this discussion has ended. Dear audience, it's been a pleasure to have you here, and it's been a pleasure to have you here on stage. It was a great discussion and an honor to really speak with you here, and also the nice questions we got. It's been clicking here conversation-wise. I'm really feeling a bit sorry that we have to cut short now, and I hope to see you all again in great discussions later this day. Thank you very much. Bye-bye.